I've been struck by some of the headlines I've reviewed as of recent. For example, quote, economy barely grew in first 3 months of the year. Associated Press, quote, U.S. added only 38,000 jobs in May. Weakest performance since September 2010. Wall Street Journal, quote, will we ever get higher wages? CNN. And quote, labor force shrinks. Reuters. What is clear and verifiable is that this weak economy doesn't work for millions of working Americans. The true unemployment rate stands at almost 10%, paychecks are stagnant, and the national debt clock spins out of control. After almost 8 years of the president's economic policies, he's on track to be the only president in U.S. history not to deliver a single year of at least 3% economic growth. This would give him the fourth worst economic record of any president in U.S. history. The Fed cannot escape its share of responsibility in being complicit in Obamonomics because it has lost much of its independence from the administration. To wit, every member of the Board of Governors has been appointed by this president. There is a noticeable revolving door between the White House, Treasury, and the Fed. The Fed chair meets almost weekly with the Secretary of Treasury to discuss policy. Furthermore, the Fed has been the facilitator and accommodator of the administration's disastrous national debt policy and has regrettably lent its shrinking credibility to advancing the administration's social agenda. There's a better way forward, which includes renormalizing monetary policy and reforming key aspects of the Federal Reserve to better comport with its mandate. It is why House Republicans passed the FORM Act last year and are introducing the Financial Choice Act this year, which offers economic growth for all and bank bailouts for none. The Fed's so-called data-dependent monetary policy strategy says nothing about which data matter, let alone how they matter. This severely compromises the kind of policy transparency and predictability that is necessary for households and businesses to grow our economy. The Fed's so-called forward guidance continues to provide little or no guidance to the rest of us. The FORM Act, which has been endorsed by nationally renowned economists, including 3 Nobel laureates, would help reestablish the Fed's independence and promote economic growth by ensuring a systematic monetary policy framework that is truly data-dependent, consistent, and predictable. Another drag on our economy is the blurring of fiscal and monetary policy by the Fed. By paying interest on excess reserves at above-market rates, the Fed has swollen its balance sheet by which it now directs credit to favored markets. Stanford economics professor John Taylor rightfully calls this, quote, mundustrial policy for the combination of monetary and industrial policy it represents. By inviting distributional interest to crowd out the market discipline of credit, this policy favors a few at the expense of many and weakens economic growth for working Americans. Left unabated, our central bank will soon become our central planner. This cannot be allowed to happen. It is way past time for the Fed to commit to a credible, verifiable monetary policy rule, to systematically shrink its balance sheet, and to get out of the business of picking winners and losers in credit markets. I now yield 3 minutes to the ranking member for an opening statement.